traders. This is Blake Morrow. You were listening to the Morning Edge webinar. I know it was a short break. I just realized that I went off on a rant a little longer than I thought I was, a little longer than I wanted to. So we need to get started with our analysis because we do have data coming out today. We have CPI. We also have industrial production capacity utilization. We have New Zealand. New Zealand. Uh, uh, whatchamacallit, New Zealand dairy auction results. Okay, so anyway, let's go talk about the euro dollar and see where we're at. All right, so here's the euro. Like I said, we pushed below 106.50 overnight. It was enough to stop like myself out. You know, obviously some near-term traders that were probably, I want to say, you know, myself included, but you know, probably traders that were like me trying to pick off a low here, trade that range bottom. I put my stops just below 106.50 and I got stopped out overnight. So I mean, I got stopped out just below where we're at. Now it did, you know, you notice this 4-hour chart, just an observation here. It did leave up a hammer. Okay, now we are forming that next 4-hour candle, and it's not green yet. It's not green yet, but okay, I'll give you the buts. Okay, it's not green yet, but we still have you know, an hour and a half left of you know, development of this candle, which to me suggests that we still have a risk of actually squeezing higher. Now, when or if the euro clears like some of this previous support, that is going to suggest that we're probably going to start heading back into this range. If we do, all right. So the first thing I'm going to note is I'm going to note that support right now is at 106.40. All right, or 106.42, whatever the low is. But I also want to see if there's anything else significant down there because we might actually push to a new low. Okay, so if you take the range that we've been following for the last couple of days, 127% extension takes us to 106.30. So you know what I could see is I could see us breach a new low. Whoops, I didn't want to do that. I could see us breaching a new low. Okay, briefly, and then bouncing. So 106.30, I'm going to write that down as support this morning, 1.0630. Now let's take a closer up view of what's happening, and here's the hourly. All right, now you'll notice that I have this red line drawn here. Okay, this has to be broken to take the downside pressure off the euro, which comes in around 106.90. Okay, if we can make it above 106.90, then the risk is that we start squeezing. Now, I've also got this downtrend line here, and this downtrend line is not perfect by any stretch of the means, but if I connect as many wicks as possible here, pretty damn close to here, here, through here, okay, you'll notice that blue line comes in right around that same price. So I guess what I'm trying to say is if we can squeeze past 106.90, we're probably going to head back into the range. I'm hoping that's the case because, frankly, I just want to short the euro, and I'd really like to short it up here. You know, I'd really like to see a move like this, here, and back down, somewhere up here. I'm just obviously loosely drawing this, but that's what I'd like to see. That would be my preferred trade. Okay, Pedro, you're just asking how I think the euro dollar can go this week. I'm trying to figure out where it's going to go today. So, you know, on the flip side is, you know, we hit this 127% extension. I think we can bounce here, and it depends on the CPI data. I mean, if we have a weak CPI print, you know, I think the euro can squeeze. You know, if it's a firm print, we come in at, you know, 0.2%, 0.3% on CPI, you're going to see that euro take another dip. Okay, so I think this is like the course today. You want to be you know, probably staying on the short side till it gets to 106.30, or if it breaches 106.90, then, you know, you're going to see a little bit of a squeeze. So 1.0690, that's where it takes that downside pressure off for now, but it's still bearish. And just So if you look at like longer term in the euro, okay, you go out to the daily chart, as long as we stay below like 109, I mean, yeah, this thing's, we could theoretically, we can make all the way back up to 111 and still stay bearish. But one of the other things that I read over the weekend is the COT report is, the euro bears are getting really aggressive, and there's a lot of cable longs out there. Okay, so if you the reason why I think this is important information is because I am long the euro pound. My stops are below 70 pence. Right now on the euro pound, I'm down 41 pips. Okay, I'm just sitting in this trade. It's not a big trade. I'm just kind of sitting in it, and I've been, waiting for a little bounce in the euro pound. I kind of want to trade it back up towards, 71, 72 pence. I think that those descending wedges are going to start playing out soon. If you look at the COT report, we've got more aggressive pound longs, and we've got very aggressive euro shorts. So the risks of a squeeze are good. So what that would mean is like a euro would squeeze higher, the pound wouldn't go anywhere, the pound might actually go down. So that is, I think, a possibility. But for right now, like I said, longer term, the euro's bearish, and we could post a significant squeeze at any time, and we could push up 100, 200, 300 pips and still stay bearish. Okay, because remember, the longer term charts is we have this bear flag formation. For those of you that might remember, Lorne G, his last name is, I don't want to say his whole last name. He was a trader in our chat room for a couple of years, and he went back. He was a old market maker at a Canadian bank. He was in our chat rooms for a couple of years. Then he went back to work for the bank. He got he's in Toronto. He got a job offer from them to come back, and so he did. Excuse me. He wrote me over the weekend, and I got his he wrote me over the weekend, and he was saying we were matching up Bloomberg data versus TradingView data, and he's like I don't see that monthly trendline support via Bloomberg for a while. He goes, it's like down at like 101 or something, 102. He's like, but he goes, man, that flag pattern looks great. I'm like, yeah, I know. It looks like it's pointed to 80 some cents. He's like, I'm targeting well below parity, and I'm like, yeah, me too. All right, so this flag pattern, this longer term flag pattern, is still in play, and it's very, very strong. So that's why I don't want you to get too carried away. If you get a squeeze in the euro, if you get a squeeze higher in the euro dollar, let it squeeze, but look to sell it on any significant rally, and that's the approach I'm still taking with the euro. All right, let's go over to the cable. So here's the pound dollar. Now the pound, as long as we stay below 152 or 152.65, which is still really critical resistance, as long as we stay below that, it stays bearish. Okay, all we're doing is we're testing the underside of this trend line still. 50% retracements, 152.65. We could even theoretically squeeze up there a little bit, but the inflation data that came out of the UK overnight came in line with expectations, although deflationary. Okay, there's deflationary data out there. It still, it's still. I think people are expecting that the UK inflation is going to start to tick up eventually. I think it's pretty hopeful, but at any rate, the cable pushed lower and then spiked back up. So here we are, okay? But we've created a little hammer. Usually hammers are more effective when they're down at the bottom of a trend, not like mid-range like we are right now. I still say that the key resistance is at 152.65. That's the end-all be-all for the cable. So one, especially if you're long or if you're bullish the pound, that has to be taken out to get rid of this bearish trend. Okay, has to be taken out. Period. End of story. Um, support is going to be the overnight low. Now we had support here, and you can see we pushed through those lows overnight, pop right back up in typical pound fashion. I mean, you guys know just as well as I do, the cable is very efficient at stopping traders out and then turning around. So that's exactly what happened here. We went through those lows, stopped out longs, then pop right back up. So those lows are now significant. That comes in at 151.53. So we'll just write down 151.50. 151.50. Okay, let's go take a look at the Swissy. So the Swissy's still extremely strong, and you know, it's a shame that I'm not long right now because you guys know this is the trade. This is the trade that I really, really, want to be. I just really want to be in. It's a breakout any which way you slice it. I should just be long and just put it away, but I'm looking for a better entry. Obviously, we are starting to approach key resistance, which will come up at 102.50. The bottom line is if we clear 102.50, there's actually no other choice at that point in time. There's no other choice rather than to be long. Okay. But I'm still hopeful that there is going to be a dip that I can trade into. So I'm still going to look for some sort of dip. Now, where that dip comes in, I have an open order here. It ain't going to get hit. I'm pretty much confident of that at this stage in the game. But where can we get a dip to? And I don't know where resistance is, so we're going to have to figure that out. So resistance on it's just the opposite of the euro. We have a 127% extension that we're probably probing right now. Actually, 161% extension comes in at 101.45, so we'll just write in 101.50 resistance, 1.0150. Scott says I picked it up from parity last week based on your recommendation. Remember, I don't give recommendations, but I'm going to tell you how I trade things. And I'll tell you, I want to be long the Swissy. If I can get long the Swissy at parity, I'd be happy with that, even today. Okay. The thing is, I don't even know if we're going to dip down there. That's the bigger problem. Okay, so right now, this is going to be support on the way back down, which will be 1.0080. All right, that's where I sold it last week. I sold it when we hit here. Sold it like at 77 or something. As we pushed above there, I thought it was going to be a false breakout, so I sold it there. I just didn't get an opportunity to buy it back because it never dipped much. Didn't dip as much as I wanted. So anyway, any move back to 1.0080, I mean, people are going to be looking at, I'll be looking at as, oh man, is that support going to hold? And I'll be looking to, possibly get long down there if we can get it. Okay, it is still bullish. Dollar yen. Okay, so I pointed this out earlier, and I want to be clear here. So the stock market has gone up overnight. Dow, well, now they were up 90 points. Now we're only up 66. The observation was the Dow futures went up overnight. The NASDAQ, or the NASDAQ, the dollar yen has not. The dollar yen yesterday at the close was trading, 123.20 basically. 123, we were trading just above 123.20, just below it, excuse me. We didn't rally with equities. Now here we are. Okay, so we basically hit this 88% retracement. You guys know that there's massive, massive resistance up here. Okay. Massive, massive resistance trading the underside of this trend line. Okay. one of the observations we made yesterday here, let me get rid of this really quick. One of the observations we made yesterday is we still have this flag pattern, so you have to be aware of it. Okay. Okay, just I want you just to know that it's there, not necessarily trading off it right now. And so any move up to, well, those highs right here, which will be 123.60, that's obviously resistance today. Even on a strong print, CPI print, even if we get up there, I doubt it's gonna hold up there. I think that that's going to be really key resistance. We are in a range in the dollar yen, big range, big range. This is the daily chart, big range up here. Okay, support. We wrote this down yesterday, but this is now coming into play. Okay, that comes in around 123.10. If we break through 123.10, that's going to start exposing some downside. So 123.10, I think we had that written down yesterday. That is still support. It's not major support, but it is support. And watch it, because if equities start to come under pressure, that level breaks. Now we're talking possibly some downside in the dollar yen. We might see some downside. Let's go over to the U.S. dollar Canadian. Okay, so the dollar Canadian, one of the issues right now that the dollar Canadian has, and it's the same issue that it had yesterday, is that we have crude oil that is, crude oil, it broke that cycle of lower lows, or lower highs, excuse me. So we kind of broke that cycle now where it looks like crude is trying to stabilize around the $40 to $41 range. But you look at crude right here, and I'll tell you what. You look at crude, we broke that series of lower highs, but look at the price action today. I mean, just weak again. All right. So here's the thing. The dollar Canadian, okay, the dollar Canadian is obviously going to be very much influenced what happens with crude. All right. So I'm not convinced that crude's ready to turn. Okay, I'm not convinced that crude, I don't know what that trend line is, but I'm not convinced that crude's ready to turn higher. Okay, not yet. It could. I mean, if we can stabilize above 40, then maybe we might start to see a bounce here. But overall, crude still looks really weak. All right, and if crude stays weak, you see that flag pattern. Crude stays weak. You got to be very careful, very careful shorting the dollar Canadian. Okay. So here's your daily chart in the dollar Canadian. We might be developing an ascending wedge, perhaps. We don't have any Canadian data today, do we? We don't. Okay. All right. So anyway. I don't know if that's really valid. I do think this resistance is holding, though. I just don't know about the lower trend line here. I think yesterday we wrote 133.50. What was the resistance? What was the resistance that we wrote down in the dollar Canadian yesterday? What did you guys have written down? Resistance. Did you guys have 133.50? Okay, so that stuck, right? I mean, we hit 133.70, but look at the wick. I mean, we couldn't hold. I mean, yeah, that candle at that moment was green, right? It was green, but notice how we couldn't hold above 33.50. Okay, so I think 33.50. 132, 133.50. I mean 132 looks like it's doable. I personally would rather be a buyer at 132 than at 133.50, despite that false break above yesterday is more convincing than not that's the way you have to play it at this point. So 132 is support. 133.50 is going to be resistance again. I know you can say, well, isn't it 133.70 because we hit a high of 133.70. But really, you can see that was just more of a false break than anything. So I think the way to play it is, being on the long side down here. All right, it's still a big range. We're still dealing with a much bigger range, but overall, a very bullish. We're still in the middle of the flag pattern. Okay. Let me take a step back for a second. Do you guys remember my conversation with you guys about the dollar index and how bullish it is and how the flag pattern is going to work out this next year? Do you guys remember this conversation? Okay, so the conversation looks something like this. DXY here, let's go to the dollar index, and I got a monthly chart, or let's go over to a weekly chart. And you remember how I said, okay, here we are you guys remember, damn it, I don't that. Get rid of that. Okay, so you guys remember the conversation we've had the last 2 weeks about the flag pattern, and I'll draw it for you. Okay, I said, all right, guys, we made really good money from here to here. This is where the easy money was made. That was easy money, right? Now we've got a flag pattern, and we're eventually going here, right? But it ain't going to be pretty. It's going to be up, down, and we'll probably eventually make it there. It's just going to take a lot of time, and this is going to be really ugly, right? Do you guys remember having this conversation? Yay, nay? We've had it like several times over the last couple of weeks. You guys remember that? Yeah. Okay. It's this exact pattern is happening right now. You guys remember? Okay. It's happening in the dollar Canadian. This is the exact pattern right here. Remember, we made easy money in the dollar Canadian. This long right here was so easy. This, not so easy. Real choppy. You have to think about the longer term setup that we have here and try to always keep that in the back of your mind. Like the dollar Canadian is going to eventually make it to 142. It just ain't going to be pretty while it's doing it. And this is exactly what's happening right now. It's not pretty. It's taking a sweet ass time, and it's not going to be gorgeous. It's not going to be that, like I bought it at 132 and next week I'm going to look and we're at 136. It ain't going to be anything like that at all. It's just really messy, and that's exactly what we're seeing here. So same thing. Like I said, it's the same thing that the dollar index is probably going to be witnessing sometime next year, over the next year or two. All right, anyway, so that's why I still have to have that bullish bias with the dollar Canadian. I may not be bullish right at this very second, but I do really want to buy it on a dip. So anyway, getting long on a dip down to 132 still makes sense to me. All right, and so it is, right now it is in a range environment. Okay, when we come back, we'll do the Kiwi, we'll do the Aussie, do the dollar index, we'll do the peso, we'll do the Norwegian krona, which, by the way, Norway's, I was told that Norway's GDP data was blowout last night, and I missed that one, but we'll look at the Nordic currencies when we get back, and we'll get all this done before the CPI data that comes out in about 22 minutes. So don't go anywhere. Be right back. Thanks, everyone. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to finish up with the rest of these. Let's go into the Kiwi dollar. Okay, Kiwi. So, I guess one of the, the interesting things about the Kiwi is this level of support here, which is the 618. Obviously, this is a big deal. It's a bigger deal to. I think it's not as big of a deal to the market as I thought it would be, because I thought a breach of the this 64.80 was really going to produce some movement, and it really hasn't. We had the inflation stability report coming out of New Zealand overnight, and that didn't move the needle at all. It might be a case of the equity markets that are holding up really well, that keeping the Kiwi dollar from selling off too much. But I'm going to remove that support, that horizontal support that we had here, because it's apparently not too it's not too important to the market, at least not right now, and not that I can see. What will what I'll also note to you is, like a lot of these, like a lot of the dollar pairs, what we're seeing is we're seeing a divergent, excuse me, gosh, hiccups, coffee hiccups, divergent in relative strength today. Okay, so you see the push lower in price, not a push lower in relative strength. It's worth noting. So what we should probably be paying attention to is, in the event we get some sort of upside break here, we might start to see the Kiwi squeeze a little bit, and it's possible. And I mean, personally, I'd like to short the Kiwi. I'm just going to do it at a higher price. I'm not going to do it at current levels. I've told you guys, I want to play the dollar long. I don't want to do it long right now. There's a lot of setups that, in my opinion, are setting up for a possible dollar pullback. This is one of them. Okay, so watch the Kiwi here, because we'll take that high right there, which is 64.95, 65. If we break above 65 cents today, we're going to squeeze a little bit. Okay, we are. Now the overnight low is going to be 64.50. And we are still range bound in the Kiwi, probably more bearish than anything, but it's still, still just, again, not as much downside as I would have expected. All right, with this move lower, the break lower in the Kiwi. I still have a long Euro New Zealand, by the way, still sitting in that thing. It's really small, and I actually wouldn't even mind adding, but I'm a little disheartened that I haven't seen that we have not seen any downside movement in the Kiwi thus far. All right, let's go over to the Aussie. Now, the Aussie is holding up relatively well. I think yesterday's RBA meeting minutes didn't suggest that there was a rate cut coming anytime in the near future. So, those expectations have pretty much dissipated. So I think the market is now looking at the possibility of the RBA staying on hold for quite some time. Now, this is a risk. You see this? That's a risk of an Aussie squeeze right there. And this squeeze, now, do you also have to keep in mind that above, let's write down well, let's just write 71.50. Okay, above 71.50 is a big deal. Now, it's a big deal for a lot of reasons. Okay, you're going to break that downtrend line, but also keep in mind there is a bigger trend line that comes into play at 72 cents. This is the big kahuna. All right, I don't want you to get too wrapped up in, like, oh my God, the Aussie's going to squeeze. But if we get above 72 cents, that's where I probably will just buy the Aussie New Zealand no matter what. Okay, I'll also actually start looking at buying the Aussie against a lot of things. So 71.50, 0.7150. Here, wait, actually 0.72. That's key. Whoops, that is key resistance right there. Thanks, Martin. I really appreciate your tweet. Thank you very much. Okay, we're range environment with the Aussie, but man, I'm telling you guys, if we break above that yellow trend line, it's going to change the way I'm thinking about a lot of things. That's big, right? It's big. Baltic Dry Index falls 2.4%. Wow. I was just reading a Zero Hedge tweet. Sorry. Okay. Anyway. Um, all right. 72 cents. Support in the Aussie. Okay, so hold on one second. Wow, how significant is that? So what was the support we wrote in the Aussie yesterday? Martin says, "My pleasure. Simply the truth, and we should all speak up." Appreciate that, man. Really do. Um, what we write down? 70.70 yesterday. The low yesterday was 70.72. How significant is that? Oh, it looks like I was off 2 pips yesterday. Okay. 70.70. Huge reason. I mean, well, it's huge support. I doubt we head down there, but if we do for some reason, that's major support there, man. And I'm telling you, guys, the Aussie's ready to start breaking. I mean, it looks. I mean, it's poised. The Aussie's poised. The Aussie's poised to make a move, and I haven't. Do you guys? Can you guys remember the last time I've been? Greg says, "Sharpen up." Thanks. I'm trying. Have you guys? Can you guys remember the last time I was long the Aussie dollar? Seriously. No, not long the Aussie, New Zealand, or a cross rate. But when's the last time I was long the Aussie outright? Think about that. It's been a long freaking time, like a long time. Daryl said before I started trading, maybe. Kevin said a few months. It's been a long time. I mean, I might have actually tried to pick it up down here. Tried to play this bullish break here. My opinion is here. Let me get rid of this really fast. We could get another one of these, and I can put those back up later. We might get another one of these. We like this. Where we convince everybody that we're going to reverse. But to me, I don't really think the downside with the Aussie's changing. Like I don't look at the Aussie dollar and go, oh well, that's it. It's not going down ever from here. I think that if you look at copper and you realize that copper is probably going to be dropping below 2 soon, that will quelch any ideas that you have about the Aussie dollar about ready to rally back up to parity or anything. So I think the Aussie's going to stay under pressure. It just might get a squeeze. I mean, the Aussie's probably due for a good old-fashioned 300 pip short squeeze soon. Okay. All right. Let's see. Oh, thanks, Kevin. Really appreciate that. Witt says to get long the Aussies is to assume China will not go down anymore, correct? Well, that's not necessarily true. Look at the Aussies already squeezing. Look at you guys. Did you guys get ahead of me? Is that what you're doing? You guys are front running me, aren't you? You jerks. Bunch of jerks. No, I don't think that's an assumption. I think the assumption is if the Aussie goes up, it's a case of squeezing more than anything. All right. It'd be just more of a case of squeezing. All right, let's go over to the dollar index. I gotta get the rest of this stuff done, guys. I'm getting stuck in the minutia of everything else. Okay, let's go to the dollar index. So here's the dollar index. Here's the hour. What the hell is wrong here? 4 hour? What the heck? Okay. I don't know what happened there, but that's okay. Hey, look, we're at 99.50 again. Let's go over to the daily chart. You know what? How about I hit this button? There we go. Now we're talking. Okay. Let's go back to the 4 hour. Okay, here we go. So this is important because this right here is very important support. You want to see the dollar start to pull back. if we break below 99 in the dollar index, if the dollar index breaks below 99, then you're going to start a dollar pullback, okay? Resistance is the overnight high, and I don't even know why that's a, hold on, let's go see something else. Actually, let's do it this way. Give me a second here, I want to try something. We're in between fibs there. Yeah, that ain't 127% extension, not at this point. So right down resistance is being 99.70. It's a little bit higher than the overnight highs, but 99.70. And the dollar index is still bullish, but we could be in for a little bit of a pullback. Okay, let's go take a real quick look at the peso. Sorry guys, I'm moving at a snail's pace today, but we've been talking about a lot of other issues today, not just, you know, trading related issues, which has kind of got us stopped up. All right, so here's the peso. Here, let me, this is deceiving. Let's get rid of that for a second. I honestly don't know what to do with the peso right now. I don't, like, I mean, that 50% retracement's held. That resistance is good resistance. I just don't know what to do with it, and we're smack dab in the middle. That has, this again has more to do with risk aversion. So obviously if the stock market starts coming off a little bit, then you can start looking at a long here. If you guys can trade, and I can't trade it, I don't think, let me double check, let me make sure I can't trade the euro peso. I can't trade it. I don't have it available to me, not even with our new Gain Capital as our broker, you know, with Trade King. But if you guys can trade the euro peso, this is one that I think you should look for longs if the stock market comes under some pressure. Watch for a squeeze here. This is where you're going to get a little bit of a squeeze. I would actually trade this to the long side, and the way you could also trade it is trade the euro dollar to the long side, the US dollar Mexican peso to the long side. Okay. All right, but it's neither here nor there right now. Let's go to the US dollar Swedish or Norwegian krona. We had strong GDP data out of Norway last night, and look, we've come out of that channel. So, okay, my hesitation with trading this to the short side is still that cup and handle formation, but, oops, we look like we can test support here at 860. So, and if 860 breaks, guys, we might see a bit of a long liquidation in the Norwegian krona. So support 8.6000. That is significant. And resistance 873. Excuse me, guys. My son came in the office to give me a hug. Hold on. All right, guys. Sorry about that. I give my son a hug and a kiss. Okay, let's go over to the U.S. dollar Swedish krona. U.S. dollar Swedish krona, really quick. Okay, this is, if you guys want to, okay, this is one of those setups that, you know, it's almost like the dollar yen. If you want to be on the short side of the dollar going into the CPI data, your risk is manageable from here. You keep your stops above 880. Okay, that is that to me is manageable risk. I'm not suggesting that that's a good idea. I'm just suggesting that if you guys are bearish the dollar, you're at the upper end of your range. You know what I mean? just some food for thought. I don't, because I believe a break above 880 is going to really um, the bigger move above here. That's where it starts really extending itself, and that's where you have to kind of get out of the way. But I'm going to leave it alone for right now. I don't think we should keep it on our bias chart. So there's your bias chart. Let me go ahead and take some questions, guys. Going way back, going early to the very beginning of the show.